California's tax landscape for businesses can be complex, especially for limited liability companies. Today, we're diving into the California Gross Receipts Tax for LLCs, a unique tax that significantly impacts how these businesses operate in the state. The California LLC Gross Receipts Tax, introduced in 2010, is an additional fee based on the total income of an LLC. This tax applies only to LLCs operating in California, whether they're formed in the state or elsewhere. It's important to note that corporations are exempt from this particular tax. So how is the gross receipts tax calculated? The amount depends on the LLC's total gross revenue from California sources. For LLCs with gross revenue between $0 and $249,999, no gross receipts tax is required. The tax starts at $900 for revenue between $250,000 and $499,999. It increases to $2,500 for revenue between $500,000 and $999,999. For revenue between $1 million and $4,999,999, the tax is $6,000. Finally, LLCs with gross revenue of $5 million or more pay $11,790. In addition to the gross receipts tax, California LLCs must also pay an annual franchise tax of $800. This franchise tax applies regardless of whether the LLC made a profit or operated at a loss. It's due every fiscal year, even if no business was conducted. Compared to other business entities, LLCs in California face a higher tax burden. S corporations and C corporations are exempt from the gross receipts tax, which leads many businesses to prefer these structures. S corporations, for instance, are taxed at 1.5% of their net income, while LLCs are taxed on gross receipts. When it comes to filing deadlines, LLCs must pay careful attention. The annual franchise tax is due by the 15th day of the fourth month of the LLC's taxable year. The gross receipts tax payment is due by the 15th day of the sixth month, based on estimated revenue for the year. Failing to meet these deadlines can result in penalties and interest charges. There are some exceptions to these tax rules. Certain nonprofit organizations, LLCs owned by deployed members of the U.S. Armed Services, and LLCs that have elected S-corporation taxation may be exempt from some tax requirements. To summarize, the California Gross Receipts Tax for LLCs is a significant consideration for businesses operating in the state. It's calculated based on total gross revenue, with fees ranging from $900 to $11,790. LLCs must also pay an $800 annual franchise tax. While this tax structure can be challenging, understanding these obligations is crucial for compliance and effective business planning in California.